Yeah, hey everyone, Bob Gavlak here with SurePath Wealth Management. Hope you're doing well. Hope you're staying safe. I know that for a lot of us, we're stuck in our homes and, trying to do our best to either work from home or just relax from home and get stuff done. I here tried to dress up just for a little bit more normalcy here in this video, but just wanted to go through our first quarter market commentary with you all. Hope that this gives some context for some of the charts and graphs that are in here. Really what we put together and what we have here is just a lot of short term that shows us what happened in the first quarter. And I think most of us know is a very difficult first quarter for the markets. But just give an understanding for how it impacted equity markets, how it impacted fixed income, currency markets, kind of across the board, what happened, and kind of its impacts there. And I hope you also read our summary and our take just kind of on a market commentary that was with this email here, because I think that helps gives us some long-term context for why we continue to invest and why we continue to trust in the long-term risk assets. But just want to kind of walk through this with you guys. And of course, if anybody has any questions, you can feel free to reach out to me or any of the members of the SurePath team, and we'll be more than happy to walk through it with you. So what we have here in the quarterly market review, we kind of have an overview of all the different pieces of the market. And the biggest one, obviously, here is just the equity markets and what happened in the first quarter. Now, for a little bit there, this was about to be the worst quarter ever since the Depression. We had a nice kind of finish up to March, so we ended only as the worst quarter since 2008. So I don't know that that makes it much better, but overall it was just a market that was down across the board from an equity perspective. But the nice thing is that even though the equities took a big hit, bond markets for the quarter were actually positive, both domestically and internationally. And I think that that just goes to show that this was not a reaction that hit every single asset class the same way that it was kind of in 2008, 2009, that we did have some safety, some security in the fixed income space. And for our planning clients, right, the people that we're looking at, whether you're in retirement or getting close to retirement, this really played out well because we try to follow what we call the three bucket approach to have your short-term needs put into cash and fixed income like investments. And when we have this huge correction in the equities, we know that we have safety in the bond and fixed income markets that we can take any distributions out of to keep you safe, keep you secure, and make sure that your income is not impacted. So this kind of just walks through what happened in those markets. But really what I want to tie into here, and of course, there's lots of other charts and graphs and all that, but I'll just kind of high level there, is just keeping all of this in historical context. Now, one of the things that we really want to focus on is the U.S. stock market, first of all, is still up 10% over the past 10 years, even with this correction we had in this last quarter. And that's annualized rates of return. And what we can see, though, is that international emerging markets and global real estate are significantly lower in their 10-year return margins. But again, this is where we want to look at things on a diversification on a long-term basis and say, hey, let's not just pour everything into the U.S. domestic equity market because it's done better than these over the past 10 years, but let's maintain our diversification because hopefully over the next 10 years, looking forward to 2030, maintaining that diversification will give us the best risk-adjusted long-term equity returns that we can expect. Now, the bond markets have continued to do well, kind of doing what they're expected to do. We've had some serious volatility here, especially in this last quarter with the equity markets. Now, one other thing that I love charts like this that kind of give some historical context, just kind of show that the short-term news can impact things on a short run, but long-term is what we want to look at, right? And this kind of breaks out the last 12 months over the course of the last 20 years. And we can see we've had some serious volatility, especially when we minimize it in this area. But long-term, for any of us that are long-term investors that have the proper bucket set up or we're at an age that we can afford to take risks, it's important to know that this is why we don't sell out during these volatile times. So again, this is all stuff that you guys can read through, you can take a look at, you can understand what's going on from, again, a currency perspective, commodities perspective, real estate perspective, really just gives some historical context. And then hopefully our market summary helps to give our viewpoint of the markets and why we aren't making fear-based decisions, but we are controlling things that we can control. So let me know if there are any additional questions or if there's anything else that you would like to talk about or run through. But overall, we had a really bad first quarter, but hopefully as the stay-at-home orders start to lift, as we start to get back to work, and as unemployment starts to go back down, that things will get back, maybe not to normal per se, but at least to a level that is more sustainable and a little bit more normalcy in our lives. So I hope from a personal perspective that everybody is staying safe. I hope that you're all doing well. And of course, from a financial perspective, we are here to make sure that we're being proactive, not only in your investment management, but also in your overall financial planning. So let us know if there's anything that you have questions on or that you feel you want to discuss. But thanks for taking the time. Look this over and let me know if there's anything else. Take care.